Hello everyone, my name is Clinton Hart. I am the primary and intermediate trade instructor for Top Gun Options. And today I'm going to be walking you through one of our trade alerts. Today we're going to focus on SPY. It tracks the S&P 500, right? It's an exchange traded fund, an ETF for short. Okay. Tonight is Sunday. I'm getting ready and putting my strategic trading plan together for next week. I got off the phone with some important people. I feel important in my circles. They are telling me that the banks and the funds are starting to roll out of their longs. That's why we're seeing an exhaustion at this level the last couple of sessions. People are locking in already the money they've made. Okay? And with the high gasoline prices cutting into GDP, Goldman Sachs cutting GDP forecasts, other smaller to medium banks jumping on Goldman's back cutting GDP forecasts, turmoil in Europe, turmoil everywhere else, not so fancy housing numbers. Okay? Exhaustion of the earnings season, slightly technical factors showing me exhaustion, maybe a pullback is needed and evident in the coming days. Okay? All these things combined, I create a mindset. I'm bearish, either bullish or bearish or neutral. Okay? Today I'm bearish. I'm going to show you, I'm going to put on an intermediate trade, the long put vertical. Okay? March is the front month. We're not going to go to that month because there's only 12 days of expiration. Theta decay is accelerating in the last 15 days. Okay, so we're going to go to April. Calls are on the left, puts are on the right. Okay, and the strike, this is the price line. For those of you not familiar, okay, I think most of you are familiar though with the options page, so I'm going to go ahead and assume, which is not a good thing in life in general, but today I'm going to assume. Okay, and to make this thing nice and crisp and clean and not go into an educational mode, which I do offer on one-on-one coaching and we do offer in general at Top Gun Options, but not in the trade alerts. They're pretty concise and quick. I'm going to grab the 138 puts, okay, and I'm going to spread them against the 135s. April month. Okay, so I'm buying 10 April 138s. Okay, that's correct. Add a put. I'm going to sell it. $115. And if you want to play around a little bit with the strikes, if you want to be a little more bearish or less bearish, feel free. So here's what happens. It's going to be a little bit more expensive because the sell price of the further away won't be as much. Okay, I'll do some education here. You're buying this, let's say for $3.50. Make it easy, math. $3.50. If you sell the 135s, someone's gonna give you say $2.40, right? $1.10. You're gonna pay $1.10 for the spread. Okay, you're not gonna get as much if you sell the 134s. There's not as much value there. If you want to go way out, 130s. But your profit potential is more, so it's a give and take. So it becomes an art nearly picking these strikes. Alright? Now I'm going right at the money. 138s. Alright? Buying the 38s, selling the 34s. So the most I can make is four credits here. Minus the cost. Alright? But I'm going to go 135. 3 credits. Minus what I pay. Okay? 1.1. So 1.9 is what I could possibly make. Create the order. And I'm going to go to 115. Okay, I'm going to go 110 in case it opens up pretty good. Slightly bid below for 10. Reanalyze the situation because I'm a little psycho over this. I love to go back and forth. I'm not a quick trigger puller. I'm more of a sniper. But this is what we like to look at. The metrics. What's your max profit? 1900. What's your max loss? 1100. This is where you find out where your stop loss is. How much pain you willing to take? Are you willing to lose the entire 1100 to make 1900? Some people are. Not a bad trade-off. Okay? Give your position room to breathe. Here, on Top Gun Options, we're pretty strict on our stop loss. Okay, to each its own, we're going to go 50% of this. Okay? So if we do get filled tomorrow morning, instantaneously, we're going to go in there and put a stop loss in at $550. Doesn't give us a lot of room, but we want to be right initially. We want the market to open up and go down. That's this trade. I just have some feeling there are going to be some offers on the board. Okay? Alright, when we're looking to make 1900 max, this thing goes to 135, we maximize a profit. Realistically speaking, we'll probably start taking chips off the table in this area right here, depending on what the market is giving us. Alright? Alright. And to be quite frank, this is a great segue into our strategic trading plan. We have a step-by-step process here at Top Gun Options, which really sets us aside from a lot of these trading groups or alert systems. And you can see it when I'll be following this up with a written trade alert. So you'll see our plan of action. And it starts with mindset, which would be bearish. Commit criteria, why we're putting it on, which we've already covered that. The tactic, which the tactic is going to be the long put vertical. Alright. The tactical employment, which is initiating the 135, 138. Right? Okay. Then we look at the profit. When do we take profit? You have to have a plan for this, folks. Right? The stop loss, be strict. To each its own on that. So it's up to your discretion. But we stay consistent. All right. All right. And then what a mid-course guidance? Is there anything we need to do during the course of the trade that could change? And this is pretty cut and dry. This position, it's not a time spread or any diagonal or condor or anything we need to roll. But there are some legging out features that we can get into. But I'm going to cover that right now. Okay. But the mid-course guidance will cover those things in the written portion. All right. And we'll focus on at the end of the written. It will be a summary of another more supplemental reasons why we put the trade on. Okay. We're going to send this tomorrow morning. Let's get her done. Okay. We're bearish to S&P on the open. We're hoping to see a pullback to the 200 moving day average. Probably not going to happen tomorrow, but I think eventually the market's going to start waning, exhausting. If not, we'll get stop lossed out. We'll learn from the situation and move on. But today, folks, that is a trade alert for the SPY. A 138, 135 long put vertical executed on the open for $1.10. Alright? Top Gun Options, Clinton Hart, primary and intermediate trading instructor and trader, also a commodity trading advisor for Hart Capital Advisors. Trade smart, not hard. Have a good one.